Hey, what's up, my friend? So, in this video, you'll learn 3 of my favorite chart patterns and how to actually trade them step by step, right? I'll explain to you what are these patterns that I love to trade, right? Why I love to trade them and how to trade them, right? Talking about the entries, stop loss, and exits. So, the chart patterns that I'm about to share with you, right, can be applied for the Forex market, the stock markets, the futures market. So, don't think that, it only works in certain markets because that is not the case. So with that said, let's move on to the first pattern. The first one is what I call the false break pattern. And the concept is very simple, is that when the market, right, makes let's say a swing high over here, right, then it rallies back up higher, breaking above the highs, and then suddenly the market does a 180 degrees reversal and smashes lower and close near the lows of the candle. So what this happened is that, traders who actually long the break of this highs, right? They long the break of this highs as the market is rallying higher, are now trapped because the market did a 180-degree reversal, right? They are in the red right now. So they are now so-called trapped. So this is what I call the false break pattern, where the market breaks above a significant high and then does a sudden reversal, closing lower. So if you want to see how it looks like, right, this is an example of a false break. You can see that this is the high over here. Market breaks above the high and then does a reversal, closing near the lows of the candle. So traders, you can see, right, if they are long on the breakout, they are now trapped because the market has turned against them. So you can actually go short, right, on this pattern on the next candle open over here. Where you can set your stop loss, right, is ideally you want to set it a distance away from this high because you want to give your trade, more breathing room, right? Because what can happen is that the market trades higher, trigger above this highs, and then continue trading lower. Okay, so give your stop loss, right, more breathing room, right? So set it a buffer above this highs over here, right? And you can enter your trade on the next candle open over here. So for targets, right, so if you notice, right, the false break pattern, right, you're always trading against the current momentum. So the current momentum is towards the upside and you're trading against it. So I won't recommend being very aggressive with your targets, right, trying to, capture the entire trend, right, to ride the entire reversal move towards the downside. Instead, there are two options, right? Number one is, what I suggest is that you can consider taking profits at obvious swing highs or lows. So in this case, you're short, right? You can consider taking your profits, right, just before this swing low over here. That's the first option. The second option, right, is you can trail your stop loss, but trail it, right, closely, right? Don't give it too much wiggle room because the market, right, can suddenly reverse, right, and continue this uptrend. So trail your stop loss closely, and what you can do and how you can do it is trail it using the previous candle high or low. So in this case, right, if you are short over here, you can trail your stop loss, right, on this previous candle high. So if the market, let's say for example at this point, right, the previous candle high is this candle over here. Okay, so if the market breaks and closes above this previous candle high, you'll exit the trade. So using this second technique, you can see that you actually managed to write down this swing down lower because all the way, right, the market did not break and close above the previous day high or previous candle high, depending on the time frame you're looking. Okay, so this is the false break setup that I want to share with you, right? And it's a very simple setup, right? And the logic is very clear, right? You're just simply profiting, right, from traders who long the breakout and are now trapped. The second pattern that I want to share with you is what I call the volatility contraction pattern, right? It looks something like this. So just to illustrate, right, is that the markets, right, if you have traded for a while now, you know that volatility is always changing. It moves from a period of low volatility to a period of high volatility. Like, for example, the market is very volatile, then it gets quiet, then volatility can pick up again, then it gets quiet, can pick up again, gets quiet. So you can see that volatility in the markets, they're always changing from a period of low volatility to high volatility, low volatility, and then to high volatility. Okay, so using this concept, you can actually trade this particular pattern in anticipation that the market, right, could in anticipation that volatility could expand in your favor. So just to share with you a few examples over here, you can see that this one over here, right, the market volatility is pretty low, right, nice and low. The range of the candles are getting tighter and tighter. Similar for this, right, range of the candles are getting tighter and tighter, right? Then you have volatility expansion. Then here you have a reduction in volatility, and then volatility expanded lower. So how can you trade the volatility contraction pattern? Well, it's actually quite simple. This is more towards trading the breakout. So what you can do is wait for the market to break above the highs, right? And enter your trade. And you can, set your stop loss, right? Reference it from the low of this range over here, this mini range that is formed by the volatility contraction, right? You can set it a distance again away from the lows, right? Let's say somewhere here, right? And this high over here is where is your entry. If the market breaks above the highs, or you want to wait for a close, that is fine as well. And then you can just write the whatever move, right, if the volatility does expand in your favor. Okay, so for this type of volatility contraction move, right, sometimes it's not possible to have a target area to reference to set your stop loss, right? Because you can see that in this portion, right, you're trading near the highs over here, and on the left side there is nothing over here to set your targets, to reference to set your target profit. So what you can do is, again, use a simple tool like a moving average, right, a 20 period moving average, right, and trail your stop loss and see how far this burst of momentum can go, right? So if the market breaks and closes below the 20 period moving average, then you exit the trade. Okay, so this is how you can actually enter a volatility contraction pattern, right? Setting your stop loss just beyond the lows over here, somewhere here, give it some buffer, and then trailing it with the moving average, like the 20 period moving average. So moving on, right, the last pattern that I want to share with you is what I call the ascending triangle pattern, right? It looks something like this. Okay, and you can see that, right, this pattern is a sign of strength, right? And the reason why I love to trade this, because it's telling you, right, that the buyers, they are willing to buy at higher prices, right? As the market make another higher low, it's telling you that buyers are willing to step in, right, and buy at these higher prices, right? And you can be sure that there are traders, right, who will go short just because the market is at resistance. So they'll go short, and where would they put their stop loss, right? Chances are above this highs, above this highs, above this highs, right? Because that is what the textbook says, right? Set your stop loss above resistance. So what happens when the market, right, have buyers who are willing to buy at higher prices, and you have a cluster of stop loss, right, just above this area of resistance? Well, if the market trades above the highs, you can expect that this cluster of stop loss, right, would become buy orders. Because if you are short and the market hits your stop loss, right, that would transfer into a buy order, and that would fuel further price advance, right? And this is why the ascending triangle is a sign of strength whenever you see it. So how you can how it looks like, right, is something like this, right? This is the chart of Ethereum, right? You can see that again, higher lows coming into this area of resistance, market break above it. So how you can trade it is, again, go along on the break of the highs, okay? And when you are setting your stop loss, right, again, give it some room for the trade to breathe, right? So this one over here, you might want to set your stops below this swing low over here, because if you set your stop loss in this range, right, technically the pattern is not invalidated yet, right? This ascending triangle pattern still holds. So you want to set your stops, right, where this pattern, this ascending triangle pattern, is so-called destroyed, right? So at which level should you set your stop loss, right, where this pattern will get destroyed? That is the question. And for me, right, you want to set it, right, a distance away from this swing low over here. So I would say somewhere here, right? Because at this point, right, the market reaches this level over here, right? You know that this upward trend line is broken, right? This swing low is broken as well. So at this point, right, the pattern is invalidated, it's destroyed, and you want to exit the trade. Okay, so for entries, it's quite straightforward. You can just go long when the price break above the highs. And as for stop loss, as for target profits, right, again, similar to the volatility contraction pattern, sometimes when you look left, there is nothing on the left, right? So how can you set a target? So what you can do is use a simple tool like the moving average to trail your stop loss. So depending on the type of trend you want to capture, if you want to capture a shorter term trend, you can use a 20 period moving average. If you want to capture a medium term trend, you can go with a 50 period moving average, right? And if you're on a longer term trend, you can go with a 100 or 200 period moving average. So this is the ascending triangle chart pattern, right? And one thing to notice is that, again, over here, when the market break out, you have this volatility contraction pattern. Again, if you miss the breakout, this is another pattern that you can trade, right? And capture the burst of momentum towards the upside. Okay, so as a recap, right, these are the three of my favorite chart patterns that I love to trade. Number one is the false break, where you profit, right, from traders who long the breakout and then got trapped when the market does a sudden reversal. The second pattern that I like to trade is the volatility contraction, because you know that the market, always changes. It moves from a period of low volatility to high volatility. So if you position yourself in a low volatility environment, and when the market does an expansion in volatility, you are already positioned in the move, right? While other traders, try to scramble and chase the market, you are already in the move. Okay, and the last pattern that I like to trade is the ascending triangle pattern, right? This is a sign of strength, right? Because, there are traders who are short resistance and their stop loss tend to, cluster above the highs. And if the market breaks out above it, right, you could get a pretty decent move, right? Higher. And the opposite of the ascending triangle pattern is the descending triangle pattern. Now, if you have enjoyed, right, what I've just shared today, right, and you want to learn more, go down to my website, tradingwithrayner.com. This is the link over here, tradingwithrayner.com, right, and scroll down a little bit and you can actually access 2 of my trading guides, right, the ultimate trend following guide and the ultimate guide to price action trading. So if you want to learn how to write massive trends in the market, like for example, we spoke about the ascending triangle pattern, the volatility contraction, right, this guide will share with you step by step, right, on how you can go about writing massive trends in the market. And if you want to learn how to better time your entries and exits, the ultimate guide to price action trading, right, will share with you more details on how you can go about, right, doing so. Okay, so these 2 guides are completely free. Just go down to my website, tradingwithrayner.com, click on this blue button, right, and I'll send it to your email address. Okay, so with that said, I wish you all good luck and good trading. If you've enjoyed this video, right, please hit the like button, the thumbs up. That would mean a lot to me, right? Hit the subscribe button so you'll always stay updated. And if any questions, anything that you want to, ask me, feedback, just leave it in the comment section below and I'll get back to you. So with that said, right, I wish you all a great trading week ahead.